All right, I've moved. I'm in a new house. Don't you love my view behind me here? It's just amazing. Darn kids. They keep playing out there and hitting my window. Just kidding. That'd be cool if that was my view. Be freaking awesome. Be incredible. All right, great. So now we're in chapter 16. Cash flow statement. Dun, dun, dun. We're learning the indirect method in the cash flow statement. So what are we going to do? How are we going to report this information on the cash flow statement? Loss on the sale of land. What is it going to be? What is it going to be? I think it's going to be a cash. Wait, loss on sale of land. That means we got money coming in. So it's going to be an investing cash inflow, I think. I'm only going to do a couple of these. Payment of long-term debt. Financing cash outflow. Increase in salaries payable. Cash inflow. Oh, sorry, we're doing this. Okay. Increase. So it's going to be addition to net income. All right. I think those are right. Okay. I did screw up the loss on the sale of land. That is, I wonder if this, because it's the sale of land, activity to not use to prepare the indirect statement of cash flows. Definitely something we're using. It's definitely cash because we sold it. But I don't think it's financing. It's got to be. It's not operating. Is it really loss on the sale of land? We're getting cash inflow. Financing, I guess. Let's check that. I just want to see. It's an operating activity, addition to net income. Loss on the sale. Oh, duh, loss because gains and losses are removed. Oh, I'm a moron. Oh well. And I just gave you a couple of the other extra ones. That's fine. Boy, my brain. I love a cash flow statement. I don't know why I wasn't thinking that way. All right, second one. Let's do this one. The income statement and additional data is here. We are doing the statement of cash flows using the indirect method, including a separate section for non-cash investing and financing activities. Complete the statement one section at a time. Yes, income statement. Okay, income statement. We're going to do net income right here, which is 47,400. Adjustments to reconcile net income. All right, I don't see any gains or losses in here, so I think we can forego those. Now let's start with depreciation expense. Plant assets. We're going to add that back to net income because we subtracted out a non-cash situation. This is our additional information. Sale of land. See, that's why. Oh, because it was a loss. There was no gain or loss. Okay. I was thinking of the actual cash and what it was, which, okay, that on the last one. Payment notes payable, dividends from the balance sheet. Okay, this is what we want from the balance sheet. So adjustments to net income, we're doing current assets and current liabilities. So cash, we don't deal with that because that's this whole financial statement's dealing with is what explaining this change in cash. So accounts receivable decreased. So we're going to say decrease in accounts receivable. And for assets, if it decreases, it's going to go opposite. So if it decreases, we're increasing 56,000 minus 45,000. So we have an $11,000 increase. Sorry, addition to net income. Merchandise inventory was an increase. And that was an increase by 6,000. So we're going to decrease that. Those are all of our current assets. Let's look for current liabilities. Accounts payable, 22. That increases. So we're going to add it 22, 32, 17,000. So this is an increase in accounts payable. And then a decrease in accrued liabilities. for 5,000. I believe that's it. So let's find out what our total adjustments to reconcile net income. 7 plus 11,000 minus 6,000, 17,000 minus, oops, 5,000. So I got 44,000. And then we're going to add both together. 91.4. Well done. Cash provided by or used for operating activities. Oh, that's what we just did. I was like, wait a minute, we just did that. Cash flow from investing activities. Remember, we're investing in ourselves. So we're looking for plant assets. Plant assets increased by a significant amount, means we purchased some. Okay, 121. Let's look and see this additional data. Acquisition of plant assets is 121,000. Of this, 190,000 paid in cash and 12,000 by signing a note payable. So that's our significant accounting thing we got to discuss. So we're going to say cash payment for acquisition of plant assets for 109,000. I don't like that I can't finish this using that 12,000, but whatever. Cash receipt from sale of land totals 24,000. It should have been a negative for the 109. It's a reduction. We paid it. So sale of land. Sale of land. Okay, common stock, that's going to be financing. Notes payable. Payment of notes payable, that's going to be financing. Dividends, financing. Accumulated depreciation. That was the sale of the land. Wait, sale, what did we sell? Can't depreciate the land. So that just must, we got to check this accumulated depreciation, make sure it's accounted for. 27,000. If it's 27,000 up here as depreciation expense, boom, we're good. Okay. All right, I think that's it. I think that's it. So we have a cash outflow of 85,000. Now we're gonna do our financing activities. Cash receipts from issuance of common stocks, 31,000. $31,000, yeah. Okay, the next thing, cash paid for notes payable. Payment of dividends. Sorry, payments are negative, Brian. Come on now. Okay, now let's look at our retained earnings. Should be 242 minus 205.6. So we should account for 36.4. So we have net income. Well, let's just do this. 205.6 plus 47.4 minus our dividends. 242. There we go. Retained earnings is accounted for. So I'm just summing these up. We have 9,000 cash inflow from financing activities. Now we're going to do our reconciliation. Net increase or decrease in cash. We're going to sum these up. 91.4 minus 85 plus 9. So I have 15,400. Cash balance at the beginning was 21,600. We're going to add these together and we're hoping it equals 37,000. And it does. So much fun. I love these. I used to dread cash flow statements, but now that I discovered their secrets about the current assets and current liabilities, it's so much easier now. Okay, we issued a note for the what was it, the equipment or land plant assets by note payable, and that was 11,000, 12,000. I don't think there was anything else. That was it. Sweet. Fun times. All right, now's your turn. I did that one. Now you get to do this one. Got your income statement, got your comparative balance sheet. Looking at it, I'm not seeing a whole lot of major situations. Purchase land. Say that this 25/7 by financing 100% with long-term notes payable. That's going to be a bottom thing where it's just letting you know. No sales of land, no retirement of stock, no treasury stock transactions. The plan asset was disposed of for $0. Cost and the accumulated depreciation. All right. All right. I will do this one with you guys too. All right. Because I just love it. It's fun. Okay. Net income 105,700. Adjustments to reconcile net income. Let's have a look. See. Interest expense and revenue. Okay. I don't see any gains or losses. So we're fine there. Let's go to our balance sheet. First of all, let's do depreciation, I guess. Depreciation expense is 14,300. Okay. Then our increase in accounts receivable, decrease in merchandise inventory, increase in accounts payable, decrease in accrued liabilities. All right. So accounts receivable increased 2,100, so it's a reduction. Merchandise inventory decreased 11,300. Accounts payable. Oops. 5,500. And accrued liabilities were so 2,800. Remember to, I didn't cover this on the last cash flow statement because this should have been covered in my lectures and in class if you're in class. Current assets, if the current asset went up, you're decreasing the difference. If the current asset went down, you're increasing the difference. The opposite is for liabilities. If the liabilities increased, you're increasing the net income here by the difference. If it decreased, you're decreasing net income by the difference. And so that's why we got all of these things. Now, there were no gains and losses. Had there been, we would have adjusted accordingly. So I got 26,200. Add that to the net income. 131,900. All right, let's see how we did. Wonderful. Okay, investing. We're investing in ourselves. We're talking plant assets. Oh, that's not what I wanted. I need the balance sheet. Planned assets. So let's first check. We'll pull up our additional information too, because that'll probably be helpful. Planned assets. Let's first look at our accumulated depreciation. If the difference is only the depreciation expense, we don't know how to do anything bad anyway. 3,800. Hey, it's not. So something happened with our planned assets. We probably sold some. And I think we did, right? It said a planned asset was disposed of for $0. So what that means is we had some type of plant asset. Did we buy any plant assets? We bought land. Land is separate. And we bought it for 25,700. So let's look at this really quick. Oh, where's my calculator? Okay, there's our land. So we can go down here and put that in there. Cash payment for land. Oh, it was financed with long term. Never mind. Okay, so $10,500 when we disposed of the planned asset was the accumulated depreciation. So we're gonna need to piece this together. So I'm gonna bust out my Excel just so that I can think this one through. I'm actually glad I'm doing this with you because this one's kind of, you got to think this one through. So bottom line is we're just trying to reconstruct the journal entry for this. So we have to debit the accumulated depreciation. We're going to credit the plant asset. And so only land was changed. So the difference between this plant asset was our disposal of it. And we're just checking this because there shouldn't be anything. 12,000. So our plant asset should have been 12,000. Our accumulated depreciation was 10,500. Hmm. My numbers are numbering. We had a $1,500 loss, but I didn't see that on the income statement. I don't see that anywhere. Because our accumulated depreciation is what's got me baffled. We have 18,630 is our accumulated depreciation. We should be increasing that by our depreciation amount, which was 14,300, and then we should be subtracting out this 10,500. So our accumulated depreciation, oh, it is 22,430. Okay. We're good. I thought the difference was 14. Must have done something wrong. Okay, anyway. All right, we're good. There was no what was the plant asset difference? Did I do that right? 12,000. But it said our the cost and the accumulated depreciation of disposed asset was 10,500. So plant assets 22,500. Where is that coming from? plant acquisition was for cash. It didn't bother to tell us about that. It just says, okay, this additional information sucks. But that's bottom line is what we're looking at is the T account for the equipment. So, oh wait, I'm getting crazy here. Yeah, now I'm really glad I did this with you guys because this was kind of a thing. So we have this equipment, right? And this is what was throwing me off. It didn't say I didn't recognize that until the end there, and that's fine. So our plant assets were 115,330. Our ending balance is 127,330. We disposed of plant assets of the amount of 10,500. So our subtotal here is going to be our beginning balance minus what we disposed of. So now we need to increase this by an amount, which means we bought $22,500 for plant assets. I don't need to close that, Brian. 22.5. So we spent we decrease cash paid for acquisition of plant assets. Sorry, that one took me a minute. I had to really kind of read this. And I think that's gonna be it because I didn't see anything else that involved plant assets. See, they do all those extra lines. Just remember, they do that on purpose. Okay, stock issuance. Our cash is different, so we're going to look at that. I mean, our common stock is different. Of course, our cash is different. So we got 24,800 for issuance of common stock. Let's look at our retained earnings. We're going to do the same thing with that T account that I did with equipment. Okay, retained earnings beginning balance was 8,200. We add net income to that. Okay, so we'll subtotal this. Our ending balance is 47,600. So we had to have declared dividends for $66,300. It's this T account working that you have to get used to, guys. You're gonna have to know how to do that. It's essential. I want to make sure I covered everything else. Yeah, that covers everything there. That covers everything on the balance sheet. Let's go ahead and net this out. 41.5 cash outflow. Oops, I missed something. Cash outflow, common stock. What did I miss? Oh, wait a minute. Was it there on the income statement? There was interest expense, interest revenue, income tax. Oh my gosh, I didn't look at long-term notes payable. Look at that. I'm dude, brain farting here. I'm like, what did I miss? 104 minus 73. So our cash payment for notes payable was 31,000. I think I got to check out this additional information again. Okay, but we got to take this out because that wasn't part of it. So not 31,000 minus 25.7. So 5,300 cash payment on notes payable. There we go. I want to bet that was my error. 24,800 minus 66,300 minus 5,300. So 46,800 cash outflow. Oh, come on. We purchased land by financing with a long-term note payable. All right, let me just do I have one check left. Let's just do the T. I should have just defaulted to the T account anyway. All right, our note payable began with 104. Our ending balance is 73,000. But we issued a note for 25,700. So 50, oh man, I was off. 56,700. I mean, is that right? I gotta double check that because I didn't really change the math. So we gotta go from here to here. Yeah, 56,700. So then 24,800. When in doubt, use Excel. So I got 98.2. I was so far off. There it is. So use Excel, man. Don't be messing with the calculator trying to do it in your head. That's what happens. So our net increase in cash, decrease in this case, probably. I'm just getting Excel. Not even gonna mess with this. 1,057. No, wait. 131,900. 5,500 minus 98,200. So 11,200 is our change. Increase cash balance at the beginning of the year was 1,500. Thousand, I mean. So 26.2. Yes. There we go. And then we did have that one financing activity, 25,700. And that was for acquiring land. There we go. Oh, we got more. How fun is that? How will what you learned in this problem help you evaluate an investment? Learn how to predict future cash flows, learn how to operating generate cash receipts and cash payments. Yeah, I don't think A is correct, but it's not none of the books. It's B, but I guess A. Sure. Sweet. I didn't know that. That's your homework, guys. Have a good one. See you in chapter 17, if not sooner. Sorry that one took a little while. Sorry, there's a lot of long pauses, but it